Folks, welcome to the Midweek Roundtable. I'm here with my guest, excuse me, not Jeff. I'm here with my guest, Jeff Yestein. Sorry, Jeff. Yesterday was a crazy day with the launch we had. I'm still kind of getting over it right now. How are you today, my friend?
I'm doing good. I live down in South Florida, and we had this gigantic thunderstorm that rolled through, which is good if you're trading and investing in stocks and options, since you have to deal with unexpected developments and uncertainties and come out on the other side. So it's all good.
Absolutely. And it's amazing how it rains. It looks like the world's coming apart. And then 10 minutes later, it's like nothing ever happened.
Yeah, for sure.
I love it. I love it. All right. So today you and I are going to talk about the cruise ship industry. We had a great discussion with Jeff Z a few days ago and Adam. We had a great discussion about COVID-19, how it may impact society, whether the recovery will be fast or slow. And I think that's, as you mentioned, I think that's a great segue into the cruise ship stocks. So tell me your point of view, your opinion, what you're thinking, what you're seeing, and what we can expect.
Well, first of all, when I'm talking about these stocks, obviously I know quite often we're talking about options and that sort of thing. And obviously when you're buying options of any kind, time is money. And that's something that with cruise line stocks, in this case, I'm really talking about buying the stock and looking for it to be higher a year from now, 2 years from now. So we're talking about a much longer time frame. But a couple of things to keep in mind here as we discuss this. Because one, I see a lot of interest from people that know what I do, and people who have seen stuff I've posted elsewhere on the internet talking about the cruise companies, and they'll get in touch with me and say, hey, what do you think now? That sort of thing. And I have to tell you, I like the risk reward here with the cruise companies, with Royal Caribbean, and yes, even with Carnival, if you're willing to look at these stocks a year and 2 years from now. So, two things to keep in mind. One is all stocks and all indexes move in anticipation of future events. So we may not understand why a stock is going up or down, but the answer is somewhere over the horizon, regarding the news and what investors are going to be thinking about that news, again, at some point in the future. And same thing, it's kind of the flip side of it, but stocks generally are discounting the worst when there's bad news. And with COVID-19 and the pandemic, certainly with the cruise sector, it has been hammered hard. I mean, these are both stocks that have dropped about 80% from, the sort of close to the highs in January and February, with the lows in mid-March essentially, and have both rebounded, basically doubled off their lows, but obviously there's still a ways and will be for some time to come, a ways from making new highs anytime in the next couple of years. It doesn't mean you can't buy them though and get some really good results as we move through this pandemic and come out on the other side.
Well, let me ask you a few questions, and I just want because we have some readers who are just getting started, and we have some readers who are seasoned investors. First of all, I want to thank you for starting off with your time frame horizon. I think that's a big problem, because sometimes people talk about things and they don't really talk about time frame, and it catches people off because, talking about a 5-day investment is very different than talking about a potential 3-quarter investment or whatever it is. So I'm glad that you started that off. And for those of you who are just getting started, the reason Jeff did that is because options have decay. They have a substantial decay. So if you're going to hold a position for an unforeseeable amount of time as an investment versus a trade, you're probably going to do better off getting into the stock itself. Whereas if you're doing a trade and you know where your entry and your exit is, then you have a very specific period of time, then options are great. So I just wanted to kind of throw that out for people who are just starting out and who are new to this. And for those of you who are thinking, well, why would I buy an option? Why would I buy a stock? It's a time frame analysis. And I'm glad that you started off with that, because one of the questions we're going to get is he talking about 2 weeks? Is he talking about a year? So that's great. Let me ask you, we've recently, just recently, last few days, there has been a ban on cruise ships till November 1st. First, they said it was going to be September 1st. Now they're talking November 1st. And after that, they're talking about 50% capacity for the foreseeable future. What do you make of that? How do you think that'll impact? Because the reason why I'm asking that question is for the purpose of whether they have enough cash on hand to move forward in light of this downside move.
Yeah, absolutely. Well, let's talk about Royal Caribbean first, because the stock had a nice pop the last handful of days. It is still, in a downtrend, compared to where it was again 6 months ago, no doubt about that. But the reason why the stock popped, they sent out their quarterly earnings. They lost less money than Wall Street had expected. But the other part of it was, they're still getting they still have a really good liquidity position, as does Carnival. I mean, both these companies, thanks to the Federal Reserve and all the other efforts that we've seen, they've gone into the bond market and basically borrowed what they need in terms of credit facilities and that sort of thing to get through this. I mean, I think the position for Royal Caribbean is like 11 or 12 billion dollars that they have loaded up on this. And so, yes, does it cost money for them to keep these ships essentially mothballed as we wait for this thing to go through? Absolutely. But the key part on this, and you know this, Roger, but for everybody else when you think about investing in an individual company, an individual stock, you have to think about, all right, what we know right now, but then 6 months and a year from now. So when we're talking about the pandemic, in fact, if I have my screen share up, I'm going to show you this. This is the Johns Hopkins Coronavirus Resource Center. And so if you can see the chart, and I wish I could enlarge it just a tiny bit.
It's very visible. It's extremely visible.
So the green line on top, that's basically a 5-day moving average of the coronavirus cases, new cases in the United States. So down here, if you can see where I'm wiggling my thing, that's basically April, early April, late March. We had the dip. This is the next spike here. You can see that despite the headlines we're hearing, and certainly a great deal of trepidation about where this virus situation is going, the overall trend has been down. Now, obviously, we don't know the future. Could it spike higher in the future? Yes, certainly. But at the same time, this is part of when you are investing in stocks, you have to embrace a degree of risk. You're not always going to know what the future is. So you have to measure it by what you hope to gain. And with stocks like Royal Caribbean, I can see based on where the analysts' earnings estimates are for 2022 that, we're talking about a doubling in the stock sometime in the next 18 months or so. I mean, and excuse me, I'm just going to use my cheat sheet notes here, but for Royal Caribbean, yeah, look, this year is a complete wash, right? They're going to lose about $13 a share in let's call it non-earnings. They're certainly not earnings. Next year, they're going to lose about $1.18 a share. But looking to 2022, analysts expect them to earn about $4.40 a share. Now, this is where you just use a tiny bit of math. I hope I don't scare people with this. But these stocks have typically traded around 20 times earnings. So, if you're doing multiply 20 by, $4.40, you're talking about an $80, $90 stock, and it could certainly move up beyond that. So that's where I'm saying that these stocks present an opportunity if you're investing. Obviously, from a speculative standpoint, you can easily build a technical case for why you would want to wait. They're trading below their 200-day moving average. So I'm just trying to talk about sort of a little bit of the math side of it regarding earnings and looking at this sort of trend. And then if I go to, and this is I'm going to put up Royal Caribbean here. This is Royal Caribbean. The blue line here, that's the 200-day moving average. As I said, it's trading below that. But buying it here in anticipation of the stock sort of slowly wafting its way higher, I think is a really good choice at this point. It all comes with risk, but your downside is somewhat limited. And meanwhile, you can double or triple your money. The other point I'm going to make on this is these stocks, and you can kind of see it if I go to more of a weekly wide angle chart here. All right. So these stocks have really great upside. When they get pushed down, you can see numerous points where both Carnival and Royal Caribbean over the years have basically doubled and tripled within 2 or 3 years time out of points where, bookings were down and then the stocks come back. And I have no doubt that the cruise line stocks are going to come back, in part because, and two things, sorry, you were talking about capacity earlier. I want to address that because in many ways, we're looking at the cruise line stocks as sort of airline stocks in a specific way. If you remember back during the Great Recession, most of the airlines went bankrupt in that time period. And that gave them the leeway to basically chop their fleets down so that they only had enough capacity, enough seats available for that time frame. And of course, then as the economy recovered, what happened? Suddenly we all had to pay a lot more for our seats, and we weren't finding the bargains that we used to. The reason why is because there were just a lot fewer seats available in the airline fleets. Well, the same thing is now happening in the cruise line companies. Both Carnival and Royal Caribbean, which Wall Street had argued in the last couple of years that they had too many ships. Well, now they're beginning to take some of those ships out of service. Carnival just sent one to, you call it the breaker yard, where they basically just break up the ship and it just, goes away and gets sold for scrap. They're beginning to sort of rationalize their fleets. And what that's going to do is mean there are fewer berths available. And as the economy recovers, as we come out of the pandemic, now these cruise lines are going to be able to charge more than they did before. And if people are still as concerned in, say, a year from now about their finances as they are now, which I think they will, then we're talking about, again, cruise ships as still being a really great way to get a lot of vacation for less money than you would, trying to, fly someplace and do it that way. I hope I'm making sense with my rationale here.
You're making a lot of sense, and I like how you're incorporating P levels, price earnings levels, with technicals long term, because we clearly have some level of support on a weekly basis or a monthly basis. Wouldn't make any difference based on the time frame you're looking back, but it clearly does. But I want to play devil's advocate. I'm not that I'm disagreeing with you, but I want to play devil's advocate because otherwise, so please don't take this any other way other than no. So
no, and Roger, I think what you're saying, it's a really good point as far as you need everybody, all of us as investors and speculators, you need to have that devil's advocate, either, the other half of your brain that says, hey, hold on a second, what can go wrong? Or your wife or somebody else to say, I'm thinking of doing this. What do you think? And exactly. So whether you can defend it or not, and whether it makes sense at that price of where the opportunity is a key part for whether we're investing or speculating. So I'm sorry, go ahead.
Yeah. So no, you're absolutely right. Again, I don't want to come off like my position is completely opposite than yours. I just want to get, I want to get out as much price discovery and information between us as possible. Here's my main concern. We saw Carnival bonds get downgraded to junk bond status. And the word on the street is that then it's going to happen to RCL stock, to Royal Caribbean stock. That's one of my concerns. That's one of my main concerns. My other concern, and this is a very good concern, and this kind of goes along with what you've mentioned in terms of changing their model. And I agree with you. I think that is exactly what's going to happen. Matter of fact, I'm not sure. I don't know if you're familiar with this or not, but Royal Caribbean just recently made a non-cash purchase of a very, very small luxury cruise line. It's called Silversea. And what Silversea does is it's an ultra luxury cruise line where you have a lot of personal space, where you have a lot of suites, when you have a lot of space. They did it in a stock deal. And I think that kind of reflects a lot of the direction of that you're speaking of. I think they're putting their money where their mouth is in terms of going in that direction based on what you're saying. So let me tell you a little bit about this. Okay. I just learned about this. This just happened, literally just happened a few weeks ago. So this wasn't a long time thing. The move did not involve cash. They paid for they did it in two steps. They did it in two-thirds. They acquired 2/3 of the company, and then they acquired the remaining 33%. It's an ultra luxury cruise line that they issued new shares. So they diluted their shares to do it, which is, I mean, I wouldn't, obviously that's not the best thing to do, but if you're going to, right now with very low cash on hand, and the fact that the Fed is not being really nice to these cruise companies because they incorporated out of the country, probably not the best idea looking back, but for tax purposes, makes perfect. Sure. Talk about shooting yourself in the foot, right? But anyhow, they're talking about the transaction being worth roughly $269 million. This recent one, the cruise operator paid $2 billion, including assuming $1 billion in debt. But they're talking about a capacity of 300 people per cruise in comparison to 2,400, whereas what a regular cruise ship. So as you can imagine, that's that. And Silver Sea, they're saying, is their crown jewel, acknowledged leader in luxury and expedition cruising, two key markets that are poised for growth. And uniting these two gives them an extraordinary opportunity for people. Like I personally I'm dying to go to Alaska to look at whales. Fortunately, I can afford, I don't go cruising every 6 months. I haven't done it in about 18, 19 years. It wasn't something, but I really want to go for this special thing. I want to look at whales in Alaska. So it's something I may do. And even if I'm concerned with COVID, I'm going to be a lot less concerned with a cruise ship that has 300 spots versus 2,400. And as you mentioned, yes, I'm going to pay more for it, and I'm willing to pay for more, but I'm going to get a lot more for it. So it's obviously a great deal. I think it's a smart decision, and I think based on what we're seeing, the CEO, Henry Singleton, he was the CEO of Teledyne between 70s and 80s. And that was something he was very famous for doing. He was known for issuing stocks for acquisitions and using debt with interest when prices are low, which is what Royal Caribbean is doing. And it's reminding me of this, because that's what Teledyne was known for, and they did very, very well of it. But I obviously think that is a strong position to be in. But I think it's a very bold move, because again, if things get worse, it can move downside. But in this case, it's one of those things where we know that the cruise ship industry is not going to be a continuous risk. There's going to be a time where we're going to overcome. The question is, when will the stock market begin appraising it? Is it going to start happening after October or November, when we're starting to get further into this vaccine zone, or is it going to happen afterwards? Is social distancing going to be a major factor come winter time? Are people going to be? It's a big question mark. But I agree with you. But I agree with you that Royal Caribbean's move into the Silver Seas cruise is a bold move, and they're moving into exactly the direction that you had mentioned. Do you believe? Yeah, go ahead.
Go ahead, Rod.
Well, do you believe we're going to see this in other cruise lines? This type of movement? Do you think this model? Tell me what your thoughts are.
Yeah, I do think we'll see it. And in some ways, we're already seeing it, not just with what you mentioned about Royal Caribbean, but Carnival has this line called Seabourn, which kind of goes after a similar sort of category, smaller ships, those sorts of things. And I remember doing an Alaska cruise 2 or 3 years ago. Now, it was on a big Holland America ship, but it was interesting because I saw some of these smaller, I guess you'd call them expedition vessels. National Geographic actually has a very profitable business running these expeditions for small groups, to Galapagos and Antarctica and Alaska and places like that. So it is very appealing. And, with so many baby boomers, hitting a point where, they can retire and have retired, and still have the money to go off and do these things and have experiences and bring their grandkids with them. This is all sort of part and parcel of that. Now, is that going to generate the same level of cash flow that these cruise lines have typically been able to generate, before the pandemic stepped in? No, but it is sort of a good sideline, and it sort of helps, I think, sort of diversify in the same way you were saying, both whatever comes out of the second half of this pandemic, as well as just for the future business operations. And I expect we'll see Carnival also further diversify. There's nothing saying they can't get into like the hotel business and things like that, as long as they're not competing against hotels in the areas where their ships are docked, since that kind of creates a political problem. Let me address also, though, you were talking about bonds and junk bonds for these cruise lines. I think when we talk about the stocks, I think the stocks are already sort of priced in that sort of junk bond status. The other thing I've noticed is that when you go and look at the conference calls, when these companies, when the cruise lines announce their earnings, usually the same day or a day later, they'll do a call with Wall Street analysts, and you can get the transcripts for those. And so they're seeing still a great deal of interest from people who, basically they really want to get on a ship, COVID or no COVID. Once things are safe, they still want to cruise. And both companies have offered people who had cruises booked and, of course, have had to cancel. They basically say, we'll either give you your money back, or you can, shift it to another presumed trip, after the pandemic ends. And by and large, more than 50% have said, keep my money, get me on the next cruise, again, 6 months, a year from now.
I was actually, yes, that's a very, very good point. A lot of people did not want to take out the cash. They left the cash in the kitty. That was one of the things that the CEO of CCL actually mentioned. That was a very, 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 I thought that was very, very positive. Well, all right. I think in a nutshell, I think I have your analysis, and I appreciate it very, very much. Also, by the way, Bloomberg reported that they believe that the same thing that's going to happen to this industry is the same thing that's going to happen to the airline industry. It's going to change the cruising experience for the better. Yes. So ultimately, this is a beginning of something. And the fact that, look, we both know the coronavirus is not it's not an existential threat. It's going to.
Absolutely. And the key for people to think about, whether you're talking about cruise lines or airlines or really anything in which there's too much of something, too much capacity, when you have these stocks that crater the way they have, that often gives these companies and the industries leeway to, cut basically do the heavy lifting they need to do to cut these operations, take the losses. They call it kitchen sink accounting. Just get rid of all the crap, if you will. And what that does is it clears the decks and allows the business to, function much better than it did before the crisis. We saw that with gold mining back when gold prices were at their lows, 3, 4, 5 years ago. And we're seeing it here with cruise lines. We saw it with airlines a handful of years ago.
We also famously saw it when Steve Jobs was asked to rejoin Apple. It was the first thing that he did.
Yes.
So when you say that was and I think on that note, we will leave it here. Jeff, thank you very much. This was very insightful, and I'm glad that you're giving us a very different perspective that we've seen from a lot of Wall Street analysts. Because, so far all we've heard was stay away. Stay away as far as you can. Don't touch it. It's deadly as corona. So this is a very interesting perspective, and I think it's going to give a lot of our readers who have a longer-term perspective in the market, an investing approach, something to look at and something to sink their teeth into. Thank you very much. I appreciate your time, and you have a wonderful week. Thank you for being here with me.
Thanks, Rob. Thank you.
Bye.